Welcome everybody to the Tuesday edition of the Not Your Average Investor Show. Today we've got a particular topic. It's who are rental properties not for? What do you think about that, Kate?
I am very excited to talk through those that do not move forward with us and why.
Yeah, that's essentially what this thing is. I'm your host, Pablo Gonzalez. Greg is away today, and we've got a past guest host that has gotten rave reviews. Had to bring her back. Kate Sutherland, welcome to the show.
When Greg's away, Kate comes to play.
Kate comes to play. Greg.
See, we just need like a sound.
Give me that board over there. What are your favorite sound effects, community? We want to know so we can incorporate it into the show. Let us know in the chat what your favorite sound effects should be that we need to incorporate into this thing live. Let's experiment with that. I don't know how you're going to type that. But
oh, this is fantastic.
That being said, you're joining us live on YouTube, you're joining us on the podcast, or you are here right now. We love having you here. You know what I would love is if we got some more reviews on the podcast. That'd be kind of awesome.
That'd be awesome.
Have you checked that out? Do you know kind of how many reviews we got over there?
I don't know the number of reviews.
Yeah, it's like maybe like low teens, and yet we know that we have about 170 to 200 downloads per episode. So if you're listening, just give it a 5-star quick button tap, or if you're here, just go to it and let us know why you come back, and that helps other people find it.
Love it.
That being said, you know what's next, right?
Roll call.
Yeah, let's go. Who we got? Lita Song in the house. Hello, beautiful investor from Minnesota. I know that even though Lita tapped in, it says not your average guest, but since she uses this regular call sign, I know it's you, Lita.
How cool is that?
We got the ringmaster in the house.
Drew Barnhill.
Am I going to quiz you on all this? We got Chris Lee from Fernandina Beach.
Just going to read that.
We got the MVP. You know who the MVP is.
Lee Bishop.
Lee Bishop. We got the leadoff hitter of the Not Your Average Investor Show community.
John Henning.
John Henning, that is correct, madame. Laura Colby from Washington State. Laura's back. Good to have you. We got the Mavens from the mountains of Denver over here.
Hey, Leslie.
Leslie Wilson, past star of an investor panel in the meetup.
That is true.
That is true. That is true. We got the Mama Bear.
Hey, Cody.
Cody Adams showing up in the house. The patron Santorios of the Not Your Average. That's a new one. It's from the last time that you were here.
Okay.
Michael Santorios. He earned it. We got Bill Shields with us. Buenas amigos. Buenas tardes, Bill Shields. Always happy to have you back in here talking my native tongue. Who else we got in here? Layla Powell, teammate. Superstar teammate. Good to have you in the house. Our regulars, Rosalind and Gary Riley from Murrieta, California.
Hey.
We regard you.
Oh, that's sorry. I was just waving to them.
That's okay. We got that one wrong.
I got to speak with them.
That's cool. Yeah. We got the Shaman.
Hey, Nadeem.
Nadeem Shah in the house. Also a newish nickname, even though he's been here forever. Matthew Edwards from Virginia Beach. Good to have you back, Matthew. Who else is in here? Jeff Pettyjohn from Missouri. That's a new name.
Whoa, yes.
Jeff, good to have you, man. Would love to. Yeah, welcome.
What's your favorite sound?
What's your favorite sound? Love to have you in here. Thanks for checking in. We got Pedro Nacianceno checking in from Jersey. I know that because regular call sign, even though he checked in. Ken and Carolyn Meline, the first family, matriarch and patriarch. Do you know that one? We salute you. Yes, very good. Kate's on top of it, man, as usual. I'm not surprised in any way. Aaron O'Neill, favorite name to pronounce. Into the lights, Aaron. Good to have you here. All right, let's kick this off. Kate.
Yes.
When people call into JW, it's funny, right? Because I've learned that you have this purposefully slow, purposefully kind of like, I don't want to call it a disqualifying sale, even though that is a term that's out there in sales. But in order to set up and win in rental property investing, you have to have like proper set expectations. Sure. It's got to be a good fit because it's a long relationship. Right?
Absolutely.
Like we want people to own this thing for 10 years, 20, 30 years. You gotta make it right. So JWB has this like 4-call system, 4-call, 3-call, 4-call system. And
at least.
Yeah, that makes sense. And call number 1 is this kind of like get to know you, where often people are like, heck yeah, I want this.
Sure.
And then every once in a while, people are like, nah, maybe it's not for me. And every once in a while, you're like, buddy, maybe it's not for you, right?
Yeah.
So let's talk about that. How does that conversation start when you're trying to figure out if this is a good fit for people?
It starts with just that, right? So, and this is something that I fell in love with JWB from the moment I became a part of this team, because as we talk through it on what that looks like on the sales side today, it's something that is also echoed in every other part of our business.
Mm.
So it's really neat to see the intention that we put onto the first impression that we have, no matter what capacity that you're working with us.
Mm.
Hiring, right, on the rental home side of things, like that initial introduction that we have to somebody is to ensure that goals are aligned, no matter what capacity we're working with them in. So on the sales side of things, we want to ensure from the very first conversation that we have with you that we are going to be able to help you achieve your goals. It's really understanding what your goals are and to see if the goals are aligned.
Got it. I love that you made that connection, right? First of all, big believer in first impressions, obviously, because I'm a relationship builder guy.
Sure.
I know the value of that. But I never realized how it actually does go totally across all functions.
Sure.
I know that the hiring function, it's what makes you an A player,
Yep.
right? Somebody you got to write like an essay, and then you bring people in, you show them the Tuesday morning meeting, stuff
you
like
shadow,
that.
like you get to spend a half a day in a role to see, and when we say it's a mutual fit, this isn't just us qualifying or disqualifying, it's that individual doing that themselves as well. So giving them exposure into the reality of what our relationship is going to be to ensure that it makes sense on both sides.
That's huge. As a service provider, I went through it, right?
Yeah.
Like I had to, well, it wasn't that I had to, I got to, right? Like I got to experience your culture. I got to sit down and like really understand what's going on. And we never moved forward until everybody knew what it took to win and was for it.
Yep.
Right.
Exactly.
So it makes sense that you do that on the sales side as well. So somebody calls in general, how does that conversation start? So you start kind of like figuring that out.
Yeah. So Miss Tiara is on the very front end of the sales side of things for us. So she is the one that is taking all of those introductory phone calls. And it really is going to start, her conversation starts with, what brought you to us? Why Jacksonville? What are your goals? What is your experience as a real estate investor, if any? So it's really just kind of an open forum in the beginning for them for the individual to share with us, what is it that they're looking for? Are they starting from scratch? Are they looking to expand? Just to get a better understanding of how we got to where we are right now.
Is there a wrong answer to that
There
question?
isn't.
There isn't a wrong answer.
There is just the opportunity to take us down whatever path we need to go to make sure we're catering to that individual. Because like I said, it's all kind of gonna lead back to our goals aligned, but we first have to understand what those goals are.
Early on, what is an answer there that you're like, okay, I got a good feeling? And what's an answer that you're like, well, okay, that's a red flag?
It's hard to say red flag because it's just a series of follow-up questions that we start thinking through in our head, right? So let's say that you call in and you are a local individual, right? So you're here in Jacksonville, or you're live down in one of the beaches, and you are looking to potentially utilize our services. So the fact that you're local, right? The first question that we're going to ask on that is, that's fantastic. So happy that you're here. Are you truly looking for a passive experience through this, which is how we would best be able to serve you? Or are you looking to take a little bit more of an active approach? Maybe because you know the area, you're looking at acquiring the property on your own and just utilizing us on the management side of things. So it's not necessarily a red flag. It's just ensuring that we're asking the right questions to make sure that we can serve the best way.
Got it. And that makes sense, right? Because I'm local, but I do not want to be active in any way.
Exactly.
Right? Like I haven't even seen my properties in 3 years. I went to that one property the one time, but there's also folks out here that may already have a property, that may know somebody that can get them a property or something like that. And then they go down the property management side, right?
Yeah.
I think that there is a bit of, if I'm hearing this early on, one of the first things that you're identifying for is level of involvement.
Correct.
Right. And it sounds like right now there's two kind of levels, right? There's a completely passive, show me what property, let me buy it, and let me just kind of like collect my, wealth building happening. And then there's okay, I'm a little bit more involved. I have a property. I want you to manage it. And I just want you to manage it.
Exactly.
I don't want to hear anything.
Right. Which also, though, still requires a level of passiveness, right? And so when we're talking about this good fit, we want to instill in our clients that we are going to have your best interest at heart, right? So we need to talk through how we do that, how what we have been able to acquire over the years, build over the years, the service that we provide, us as your operator, we have to establish that trust to ensure that that comfortability being that passive is there. Because even if you're just looking for us on the management side of things, we have onboarded our own vendors. We're going to make the call based off of the maintenance threshold on when to send a vendor out, when to reach out for any sort of approval, the residents that we're placing your home. So even on the property management side of things, there's still a level of passiveness that we would want you to have.
Got it. What is the downside of being too active with it? Like, why wouldn't somebody that's like, nah, man, I'm great at this. Let me just do it. And you guys just do your thing and whatever.
There's no downside, right? It works for a lot of folks, but for us to best serve our clients, we have built our processes and systems around being able to make those decisions on behalf of our clients. So the way that we communicate, the level of communication, the way that we onboard vendors, like, let's go back to being a good fit. We don't just onboard any vendor, right? We take our vendors through a certain criteria set to ensure that they're licensed and insured. We give them a small sample size of work orders to ensure that they are notating properly, that their calendars and timeliness is there. So, we put in all of that effort on the front end so that our clients don't have to. And we want that comfortability there to know, let our team do what we do best and remove that element for you. If there is kind of that constant cross communication of, well, no, I want to pick my person for this, and no, I want to step in here, we're just not, it's not going to be the most effective and efficient way for us to serve that client.
That makes sense. And it makes even more sense thanks to you adding the context of this goes across the ecosystem, the teammate, the service provider. Because what's obvious is that JWB has built a machine to run smoothly, and the value provided for everybody, be it the investor, be it the resident, or be it the service provider or the teammate, is this like clarity of purpose, alignment around what you do and what you don't do, and kind of like speed to action because of it, right?
Exactly. I mean, think about the most painful moments for a property owner are maintenance and vacancy, right? So if we cannot effectively and efficiently run through the processes that we already have in place and have established because we need to stop and check and substitute in somebody differently, that's only going to delay that timeline.
Yeah, that makes sense. And, and bringing in other variables kind of does a disservice to the idea that, like, you can have more variables down the line and displace kind of other investments of time.
Right.
But it sounds like to me, or at least what is apparent to me, is that JWB makes the investment early in picking the partner and picking the teammate and making sure that the investor comes in the property and all the, like all the data that around the property. It's almost kind of like what we were just talking about, like, what could the next iteration of the show become? If this is a TV show, you got to invest in pre-production and you got to invest in all these different things to have this like high quality thing. So if you then add these variables later, it devalues this investment and it takes the train off the rails.
Sure. Plus it's really difficult at that point to have any sort of accountability, right? When you're, like you said, when you're introducing new variables, one of the many benefits that you have working with a team that has already been put in place, processes that we already have put in place, we know to hold ourselves accountable and those vendors accountable, right? So we already have those direct relationships. We have direct points of contact. There will be misses down the line, right? Everybody's human. There will be moments of failure. We want to be able to identify and address those as quickly as possible so that we can rectify them to not allow them to continue to happen. It's really difficult to do when you're also saying, but who should I reach out to for this? Right.
Yeah. Makes sense. All right. So I think if we were to be like step one, who is this not for? I think we've made a pretty compelling case for this is for the person that wants to be passive.
Correct.
Either in the completely passive or the give us the property and then let us do it for you kind of way. If not, you're probably going to want a different solution. You can still go the rental property route. It's just not going to be with JWB. And that's kind of like the first thing that you are sussing out.
Yeah.
We got a good question from our MVP, Lee Bishop. I'm sure you've heard of him. He asks, okay, I have a question. Is the process the same even if you have been referred to by fortune builders and their passive investor group?
Yes. To which process?
Yes.
Would be my question. Even our fortune builder students, so they do have a passive income club,
Mhm.
a passive income group, and the process is the same there, right?
Yeah.
We still want those folks, and they fortune builder students get that too through their education on the fortune builder
Mhm.
side of the difference of what that really looks like, active versus passive,
Yeah.
but processes would be the same in terms of the level of comfortability
Yeah.
with that passive approach.
Yeah, the way that I understand the fortune builders group is basically they get completely educated on this idea. Like you probably have to do less hard digging
Right.
on are you in this for a passive
Exactly.
experience or not, because they already kind of know
You've
what they're getting
identified
into.
that, yes.
Yeah, so
previously.
definitely. So still same qualities that you're looking for, same process that you're looking for. I think fortune builder students, they get through it a little bit quicker because you already kind of like,
Yeah, and they've got different exposure to markets, right?
Yeah.
So you've got specialists that, through fortune builders as well that are introducing their students to different markets, saying, hey, JWB is a fantastic turnkey provider in the Jacksonville market. And so there's a little bit more of a warm introduction, if you will, between students and JWB there.
got it. Okay, so we started with the experience side of
Mhm.
it, right? Looking for passive. You just brought up this like market idea. Do you get a lot of people
Yeah.
that are calling in and they're like, well, is this like the Dallas market or is this like the Memphis market?
There's a little bit of market comparison for sure,
Mhm.
but it's more so ensuring that the clients that are wanting to work with us are wanting to come to this market for what it really has to offer, right? So one of the questions that we get asked the most often is this the only market that you're in?
Mhm.
Right? So I just think that that's such a neat story to be able to tell folks, that the fact that, like, sure, we could absolutely explore growing into another market, but I think that there's just something so telling about the fact that we're only here in Jacksonville and we've been here for so long doing this same thing.
Yeah.
That is the experience that you want to hold on to and really trust in. So beyond that, it's with all of the experience that we've gained throughout this time, we have learned how this market plays,
Yeah.
right, to our investor. And
Mhm.
going back to where goals are aligned, what would be a red flag is somebody saying, hey, I'm looking to get into a property, flip it, sell it next year,
Yeah.
right? And then help me do that.
Yeah.
That's not how, again, we're going to be able to best serve you. We want to build a portfolio for our clients for a growth opportunity
Mhm.
that is known to succeed in any market, right? I mean, goodness
Yep.
me, all of the data that you and Greg have been sharing about how this market performs throughout all different types of economies.
Yeah.
What we are proving, right? And we've got the data to back it too, that this market continues to be a success for real estate.
Yeah.
So we want somebody who believes in the growth potential that this market has to offer.
Okay, let's dive into that. So right now we've identified passive, right? Now we're talking about, you've inserted a couple of other variables.
Sure.
One is timeline,
Mhm.
right?
Yeah.
So like, this is not, like we talk about on the show a lot. If you want to succeed in rental properties, it's about buying and holding for a full market cycle, because then you get the 5 profit centers starting to play. So somebody that comes in here is like, I just kind of want to park this money for 2 years, flip it, go do something else with it. You're probably going to send them a different way there.
We are, yeah,
Yeah.
because that's just not, again, we want to hold our clients accountable to the return expectations
Mhm.
when we're talking through the 5 profit centers
Yeah.
that we're putting in front of them on the front end. And to do that, to best yield those returns over the long run, you want to hold on to this asset for a full market cycle,
Mhm.
which we've been through a couple of those, right?
Yeah.
With our tenure here as a company. So you're never going to be the spaghetti that we throw on the wall and hope it sticks.
Yeah, that makes sense. And in order to not do that, you need time to even out cycles.
Correct.
Right. And like different things, right? So then passiveness, full market cycle, right? Like you're What is the timeline that you ask people to have in mind?
We build it out. I mean, the full market cycle is between 10 to 20 years,
Mhm.
right? So we build out our internal rate of return, the IRR, over a 10-year calculator on our evals.
Cool. So you're telling people, all right, we want you to have a 10-year mindset
Mhm.
at the very least.
At the very least,
Right.
at that point too, the asset's only getting better.
Yeah.
Right.
Yeah. It's kind of like in 10 years, let's talk about this in 10 years. And you know that in 10 years, you're going to be like, what do you think?
Exactly. Yeah.
Cool. So that's actually Lee is saying exceed expectations, right? Under promise, over deliver, which is one of the core values.
UPOD, baby.
And it's I never heard that before. UPOD, I like that. And that's one of those things, like you're going to get to year 10 and maybe whatever happened in the first 10 years, at that point, you're already going to be in this like over deliver range. So people are going to want to stay longer.
Exactly.
Hold on to it. Have other options of
Right.
like not having to sell it because you can refinance and
buy
other things.
So when we're talking through on that first call, I mean, what we're getting at here is it's not just the market, but it's time in market too.
Time in market. Cool. So that's the other qualifier. Passiveness, time in market. Let's talk about return expectations, right? You're talking about a market and you said you want to be here for growth. What do you mean? I want to ask you what you mean by that, but what do you not mean by that? like what isn't growth?
So I think what we hear most often on those first phone calls is, folks are coming in with a preconceived notion. The theory does not exist anymore, but you'll hear the 1% rule.
1%. I was wondering.
Right? Yeah, the 1% rule, or this cash flow. And it's not necessarily that if you are looking, let's say you are looking for $500 a month in cash flow with one property, right? It's possible. So it's not us saying that you don't have a growth mindset. This isn't going to work. It's not a good fit. I don't know what that was, but that's the sound
effects. Yeah. How do you spell that? I don't know.
I don't know, but it's not necessarily that. It's like I said, what follow-up questions do we have now? Right. So how much capital are you looking to put down on the property? So your down payment, are you looking to go cash finance or cash purchase? Are you looking to finance the property? We can get you that amount of cash flow. It's just, how are we going to build your portfolio to do that? Right. So like I said, not necessarily a red flag that would lead us to not be able to say this is a good fit. We just want to ensure that the plan that we're putting together is able to help you meet your goals. Now, if you are looking to put 20% down, have one property conventionally financed, and you're looking for that much cash flow, then yes, we absolutely need to have that conversation with you to say that that's just not realistic for you to be able to achieve in this market. If you are looking for that asset that you can get into for a relatively low purchase price, have that long-term mentality and let this thing grow like crazy for you. Yeah. That's when we're saying defining growth, that's what we're looking for.
So what I'm hearing is somebody that is they're coming to this market not because they're looking to maximize cash flow today. It means that they're looking to maximize cash flow and net worth tomorrow. Correct. Kind of thing, right? So it's like you can engineer a portfolio through different levers to have a set amount of cash flow, but your overall philosophy is you want growth.
Correct.
And you're looking to take advantage of the fact that Jacksonville is one of the few markets where you can have positive cash flow, and it also has the best average home price appreciation than every other market that you can do that.
Yeah, I mean, and I think too, one of the beauties of having this dedicated first phone call with folks when we get to do this on an individual basis and ask these types of questions, it's also really telling if you are aligning yourself with a team that has the answers to the questions that you should be asking, right? So when we're talking about manipulating numbers, again, we can make cash flow work depending on your down payment and your purchase method, but also you just have to be very cognizant of what is and is not included in how other providers are calculating cash flow, right? So when you are changing the appreciation rate and you're not going to use historical data, that can very much change what your return expectations are. If you aren't including things like expected maintenance and vacancy, are those guarantees that we know is going to happen every single year? No, but they will happen, right? So we're not naive to that. So you can manipulate that. You can manipulate all sorts of charges and costs and interest rates, right? If you're not keeping up to date with current interest rates on pro formas, that's greatly going to change your return expectations. So it just, even if we're identifying on that first phone call that we may not be the good fit, I hope we are also arming these individuals with the questions that they should be asking other providers to know, okay, maybe it wasn't JWB, but now I'm a little bit more well-versed in what I should be asking when I go elsewhere.
Have you watched that Air movie about the making of the Air Jordans?
No, I haven't.
So I love where you're going with this of like arming people with the right questions, right? There's this like really awesome scene in that movie where Matt Damon shows up to Michael Jordan's house, doesn't get a meeting with Jordan, but gets a meeting with his mother because he knows that his mother, played by Viola Davis, is the decision maker. And she's like, why should I go with you guys? And he's like, listen, I'm not going to tell you why you should go with me, but I'm going to tell you, I think that you're going to take a meeting with Converse and you're going to take a meeting with Adidas, which back then, it's funny for us to think about it because Nike is like the monster now, but back then Nike was like the young upstart. Converse and Adidas were the main things. It's like, here's the questions I want you to ask them.
Yeah.
Right? Ask Converse, what can they do for you specifically? And what they're going to tell you is that, well, nothing specifically, you just get to be a part of it. And if you think that you're special, like you're just a part of their stable. And if that's what you want, that's cool.
Sure.
Ask Adidas who's in charge.
Yeah.
Because they just had a change in ownership. And it's like all this like younger generation vying for it. And if you want to feel comfortable not knowing who to go to and infighting, that's what's going to happen. So just go ask those questions and then come talk to me. And that's how he got the meeting back. Right. So like, I love that, right? I get the sense that in these initial calls, you probably have folks, right? Like I'm the exception to the rule, right? Like I came from within the show to whatever, but folks that haven't interacted with the show that much, you get a bunch of people that probably have been offered a bunch of different deals and they're looking at different deals and people don't have the same level of integrity in like the deal sheet and all the numbers, and they definitely don't have the same level of proprietary data,
exactly,
and where they're getting it from. So I imagine that it's probably not going to sit well if someone shows up and is like, but I have this deal. And you're like, well, that's not true.
Right. Exactly.
Instead, it's like, hey, let me ask you something. Ask somebody this to let them identify that to then get people comfortable with it. Yeah. So again, Kate keeps referencing this like first call. And we are talking about like what your first call with JWB would be like. So if you want to get armed with these questions, if you have questions of your own and you want to start going through this process, that's what going to chatwithjwb.com and picking a time to talk to the JWB team. This is essentially what it feels like, right? It's a series of questions to kind of like understand if this asset class is good for you, if the Jacksonville market's good for you, if the JWB experience is good for you. And here's a bunch of questions for you to ask everybody else. So that you're not, so that you're able to compare apples to apples, right?
Got it.
Okay. I feel like I just talked for a while there. So, so we've got passiveness, we've got time and market, we've got strategy, right?
Correct.
Growth strategy.
Correct.
This is what you're looking for. What else is a sign that wouldn't be good for you? Is it like, hey man, I got 10 G's. Can I get in on this? Like, is there
capital?
Do people show up with just like too little money and you're like, hey,
sure.
It
happens a lot. I would say, and one of the biggest reasons that we might say it's not a goodbye, it's a see you later. Right.
It's not a right now.
Exactly. Is timeline. So capital and timeline kind of go hand in hand, where a lot of folks are a little bit more exploratory and saying, I'm in, I know real estate is what I want to get into, but I'm still in my due diligence phase in terms of, is this the right market for me? Are you the right operator? That's great. Like that is what this conversation is designed for us to be able to talk folks through those series of questions, to arm them with the questions that they should be asking. And our hope is that when the timing is right, we are able to onboard that business, but if not, then at least we know where they went. Hopefully it's a good fit for them mutually that way. So, because interest rates are currently constantly changing, home prices are going to continue to go up, right? So as time progresses, if you aren't in a position to make put a property under contract in the next 2 to 3 months, it's probably not the most advantageous move for us to progress you through the sales process until we're a little closer.
Yeah.
Because we want to make sure that we're being respectful of the team's time and prospective clients' times. You know, if we take you through what a current eval and return expectations are, at the time you're closer to being able to actually put a property under contract, those numbers might have changed.
True.
So we will delay based off of timeline.
Yeah.
Ability to put a property under contract, and of course, capital. So if you are looking to, you know, we'll identify what your purchase method is. And then based off of that, does that meet, you know, if you're hoping to do a cash purchase or non-recourse out of your retirement account or conventionally finance, we're going to take you through what the minimum investment would be needed. And if you've got that capital readily available, is it liquid? You know, those are other questions that we're going to be asking as well.
So I feel like when we shot the class, at the end of the class, Greg was just like, you know, the most valuable thing to do is to have a real estate expert in your network. So like wherever you're at in the journey, like hop on this like first call and let us get to know you. But when I'm listening to you speak, like, is it worth it for the JWB team to take a call with somebody that knows they want to invest in real estate? Is probably not there financially yet. Do you still want to have that first call with them?
I think it's fantastic to still have that call, right? For everything that we've already talked through. I also, though, you know, what Tiara is fantastic at doing is identifying at the end of that call, what's the best resource to send your way.
Okay.
So it's not just, you know, it's not a see you later. We're also going to be providing resources like, have you had a chance to enroll in the course? If somebody's really early on in that due diligence stage, the course is a perfect tool to be able to provide them with, to get them to enroll in that. And again, just arm themselves with that knowledge of what to be taking throughout the rest of their research. So if it's registering on behalf of that individual for the show, getting them our YouTube playlist and shorts, then, you know, whatever that may look like, because we're going to identify and we're going to notate if we aren't moving forward with you for one reason or the other. We want to identify what that reason is and be able to give you, if you're still, you know, doing market research, let's give you some resources, some show clips, some past episodes that we have on sending different market or researching different markets. If it's return expectations, right? So she does a fantastic job of utilizing and pulling different resources that are individualized for that person.
That's awesome. All right. So if I'm somebody that's listening to this right now, because I think I'm gonna ask you where we're at right now, right? But like if I'm someone that's priced out of the market right for right now,
correct,
I need to save a couple more shekels, or maybe wait for interest rates to drop, or something. I shouldn't get discouraged. Like this first call is really designed to like figure out what your perfect next step is. If your perfect next step is, hey, let's talk about going to business with JWB, great. If your best next step is, oh, you know what, we think that you should be looking in this place because this will like arm you with what you need for like the next couple of steps. Yeah, that's a welcome call, right?
Well, and it's something too that Tiara does a fantastic job, and we want to empower our team too. If there's any bit of that, I'm still not sure at any point in our sales process, it's our job, it is our duty as a sales team to call that out. Say, hey, I'm sensing that there's still a little bit of uncertainty. Maybe we don't have everything, you know, the whole plan created for you on the first call. Of course, we aren't going to do that. That's really that high level, our goals aligned. And then we start to get more specific as we go throughout the rest of the sales process. But if there's any kind of inclination that there is hesitation on behalf of us as the operator, the market, return expectations, we should be calling that out and addressing that. So there's not a high pressure to move forward. It doesn't do either of us any good.
It's interesting. So it's interesting that you say that, right? Because it wasn't until recently that I've overheard some of these sales calls. And it's one thing to be like, hey, it's cool, jump on, no pressure, we're not going to try to sell you. But if I'm listening, I'm like, yeah, right, bro. You want me on here and you're going to just try to sell the crap out of me.
Salesperson.
Yeah. And yet it's hard for me to express as the host of the show that I've heard the sales team be like, hey, listen, because you're saying this, I just want to pump the brakes. Right. Maybe you need to take some extra time. But because of what we talked about earlier, because the bulk of the time is spent so intentionally in the early part, in finding the teammate, in making sure that the property is right, in building the team around it, and finding the service provider that can help you set up the succeed to move over quickly. Now I'm able to understand that, you know, the key to this thing is aligned goals. And you're not telling people to slow down because you're a good person.
Right.
you're,
Yeah.
you're telling people to slow down because that's what's in it for you too.
Yeah.
As JWB, it is not in your best interest to
Right.
bring somebody on who this thing isn't right for, and therefore you will act in your own best interest, which happens to be my best interest because of the way that this thing is set up.
I mean, what I do is I remove myself from this a lot, and I take a step back and I think, what are we asking our clients to do? Right? Like it is so powerful when you think about the ask that we have of our clients to trust in a team with their capital, with the client's capital, to be able to achieve these passive dreams and goals that they have. And we're doing that on their behalf.
Yeah.
We aren't walking through these properties, right? You're not taking an in-person tour of your home.
Yeah.
If that's your
big level of trust,
if that's your want and your ask, when you get to property selection, we've missed the mark as a team on our side, right? Because we have to, from that very first call, be that intentional that we are sharing how we are going to be able to do all of this on your behalf and build that trust. We can only do that if we are being completely honest and accountable and transparent with how it's all going to work. Otherwise, it would just be a mess of a relationship after we go under contract or you close on properties, right? I mean, it would not be.
It sounds terrible.
A pleasant experience for anybody. So we don't want that. We don't want that for our team. We don't want that for our clients. So I always kind of put myself back in that perspective of, let's think about the ask that we are making of our clients. Are we really setting everybody up for success to be able to deliver on that?
I love that. I love stepping back and being like, man, we are asking people to take a big leap here. So we better come correct.
Yeah.
Yeah.
And I mean, whether you've got several properties already in your portfolio or you're looking to do this for the first time, we're treating that the exact same way. Right. Because no matter what, now, if you are already a client of JWB's, that conversation is going to look a little different than it would be if you've never onboarded properties with us, because you already know the team and how processes work. But we still have to do some work in terms of what that new addition to your portfolio is going to look like. But the sentiment there is that no matter what, we just have to make sure that we're still doing this the right way from the very, very beginning, which is what that first phone call is.
Yeah. So if you're new here and you are convinced that this stuff is in your future, go to chat with JWB, get on that call, just have this conversation, make it custom for you. I think it's going to be a good use of your time. There's a really good question in the Q&A asked by an anonymous attendee. And they're saying, tell me where to go to find out what JWB is all about. I would answer that. I'll let you answer that in a second. I think you're in the right place right now.
Yeah, I was going to say.
Right. Like, and I don't mean like talk to Kate and I mean, you are right now, you can't see the attendee count on this webinar, right? But there's 50 plus people here. And some of the folks that are here are like you, anonymous attendee, who is like showing up to find out if this is for them or not. But the majority of the people that are here are actual like longstanding JWB clients and people like that. And we purposefully do this show this way so that you can be in that chat and say, hey, I'm someone that's wondering, like what JWB is all about. Somebody give me your phone number. I want to talk to you.
Yes.
So I honestly think that the best place to find out what JWB is all about is in the chat of this show right now.
Right.
Like, just see what you're asking for. Let people answer. Another great place is go to jwbfacebookgroup.com. We have a Facebook group with almost 4,000, 5,000 people in there. I forgot what the count is in there. You're going to get some unbridled opinions in there as well. So like, I'm a big believer in like the best way to find out about someone is find out what other people say about them. And that's why we create all of this. What say you, Kate?
I totally agree. And I want to build on that a little bit too of, when you think about the exposure that has for us as a team too, right? Again, if we built relationships on a really, really, really rocky foundation that just fell apart as soon as we did the transactional side of things, us encouraging folks to reach out to current clients through this community and to join the Facebook group where they can ask anything and have, a plethora of folks that have worked with us in different capacities give an answer, that puts us in a very vulnerable space, right? So I just think that it's a testament to the community that we've built here. And again, just the pride that we have on the transparency aspect of things. And then beyond that, I mean, hop on the phone with us.
Yeah.
I hope that what folks are able to take away from this is that we really truly want to identify who we are communicating with on an individual basis to ensure that we are setting you up for the best resources to move forward with or without JWB.
Yeah, makes sense. I'm going hard at the fact because Anonymous, you're here, right? So
Yeah.
like that's why
Yeah.
I'm not making a big ask. I think you're in the right place. I think the community thing is a thing. To piggyback on what you were saying, it's a very vulnerable
Yeah.
position. As somebody, Anonymous, I'm assuming you're new here. I don't work for JWB. I have a company that believes in like community creation for business development. They gave me my shot to like prove this out. And I have other clients that I do similar kinds of things with. I can tell you that most people, when you tell them, hey, the best way to like show up and market is by having an open conversation with everyone in the world and exposing yourself to comments everywhere,
Yeah.
the majority of people are not in for it. Like,
Sold.
so yeah, no, oh yeah, sure, okay.
Yeah.
The majority of people aren't, and the only people I get to work with are people that think like this, are people that think long term, are relationship builders, really care about what they're doing, and are more than willing to, as we've done many times in the past here, be like, tell me about the hard stuff, right? Like, let's talk about the crappy part of this experience and what may have happened and how we fit into this equation. So beyond this community, beyond this chat right now, the other place to go, if you go to the YouTube channel, we have these like client success stories playlist, right? So we've had a bunch of past clients come on where we talk about like, what was your journey? Tell us about the worst part of it, stuff like that. We have them condensed into like 10, 12-minute segments. There's also longer ones, so you see the whole conversation. That's another great resource. Again, that feels like more homework than just like popping in the chat, like somebody tell me your worst experience with JWB, or like going to the Facebook group, right? So those are the places that I think are best. And of course, the thing that I always talk about, if you're from the West Coast, you get this. If you're from the East Coast, you can say Chick-fil-A. But I always talk about like dealing with JWB is like going to an In-N-Out burger.
I've heard you say it.
Yeah, you've heard me say
one time.
You know, like these businesses that clearly hire the person that was voted most likely to succeed in their high school and like captain of the college soccer team and stuff like that, where every time you walk into it, everybody you deal with is an experience. Like talking to Kate right now, they're like friendly, smart, engaging. You like what they're saying. You feel like you're friends with them the moment that you meet them. Like that really is like, get on the phone with JWB and you're going to have that experience. Or if you like ever talk to anybody that works for JWB, that's the experience that you have. So like, you can't hide in the shadows when you're like up close and personal, which is what everything is designed to be here and with JWB, right?
That's right.
Okay, so chatwithjwb.com. Okay, we got a couple more questions before I get into actual market conditions and money for it. Walt Hart. I believe Walt's from Middleburg, so he's kind of local.
Yeah, I think he's been working with Danica.
He's been working with Danica. Will JWB manage properties in surrounding counties, or do you only service Duval?
That's a great question. We will service properties located in surrounding counties. So St. John's, Nassau, Clay County. We do try to keep it around 45 minutes to an hour from the office, just so that we can ensure that our vendors can get to the property in a timely manner. If we were ever to need to have our construction team be the ones to actually go out, we want to make sure that we can effectively and efficiently get there. So we do try to kind of keep it around that 45 to an hour mark, but we do have properties in those surrounding counties.
Cool. Patron Santorios of the Not Your Average Investor community, Michael Santorios says, on these first calls, do you find that they're already invested in real estate elsewhere, looking to diversify in Jacksonville, or are they generally new to real estate?
All of the above.
All of the above. I was completely new to real estate. Yeah. Definitely. This is definitely designed as like, hey, for someone that would never call themselves a real estate investor, but wants to invest in real estate, definitely for you. For someone that is invested in real estate and knows what they're talking about and just like wants to work with the category king of like what they're doing in the market that has these great dynamics, it's for you too.
That's right. And that's why, I mean, like I said, Tiara does a great job of asking those questions on the front end too, because we're going to tailor the conversation differently based off of your needs and experience coming into it.
Got it. Somebody checking in from the text. So it says Not Your Average Guest is asking, why does someone get into this part of the market? Cash flow or long-term only? What say you, Kate?
It depends on what they're looking for. Right. So, I mean, when you're coming to the Jacksonville market, we are going to spend quite a bit of time talking through what this market has to offer. So that kind of goes back to our market and time in market components. But we also want to understand, what is it that you're looking for? So, I mean, we talked earlier about, if it's cash flow, let's define that. Let's see if it's a possibility that we can build a portfolio that achieves that, what you're looking for. But your real win here in this market is holding on to this asset for a full market cycle.
Yeah. And
which is a growth piece.
Yeah. Well, and what I'll tell you sitting in this chair, right, is that we've been doing like the portfolio of the week, property of the week thing for a long time, the guest investor for a long time. And every time we break down people's experience and what they've gone through in their portfolio, we end with the pie chart, which shows where your wealth is coming from, right? And we talk about the 5 profit centers, right? It's cash flow, tax savings, debt pay down, and appreciation. And if you can look at a pie chart, every single time that we show the pie chart, no matter how long or how short they've been in it, it generally looks like a Pac-Man. In the sense that there's this one profit center that's the body of the majority of the wealth that's created, and then the mouth of the Pac-Man is the 3 other profit centers. And those 3 other profit centers that make up the mouth are cash flow, tax savings, and debt pay down. The Pac-Man, whether it has an open mouth or a very closed mouth, is always home price appreciation. Right. So like, if you are investing in properties and what you want to do is build wealth, then you have to be thinking about what that home price appreciation piece is going to be for you. And what we find is that when you go to other markets and you're trying to like maximize cash flow, you're giving up on the upside of the home price appreciation part, which no matter how you look at it in every other market, it'll just be like a wider open Pac-Man, right? But like the pie, the thing that bakes the pie and makes it grow the most is the home price appreciation part. So short answer to your question of like, why do people get into this market, is because they want to maximize their net worth. So that is really the reason why people pick Jacksonville the most.
Well said.
Tara Paget asked, Tara, I haven't seen you in a while. Good to have you. Since you all only service Jacksonville, do you have relationships/partnerships with other turnkey providers in other markets?
That's a great question. Not partnerships. I mean, of course, we're going to be aware of what is happening, more so just of what our clients are being exposed to in other markets. So it's not necessarily a relationship inside of, we would refer you to this turnkey provider if you're not exploring Jacksonville. It's more just us understanding what is being projected in terms of return expectations in them so that we can speak on behalf of that.
Got it. Good answer. All right, Kate. So I guess the final thing is like, right now, who's this for? Who's this not, right? We figured out you want to be passive. We figured out you want to be in a time and market at least 10 years. We figured out if you're coming to Jacksonville, people coming to Jacksonville are trying to maximize their overall wealth. And you can do some things to make the cash flow work for you, but your strategy has to be wealth creation, not just cash flow today. And then we talked about this like minimum amount of money that you need to get in right now. I would love to hear from you just like where the market is right now for someone that's going to be investing in the next 3 months. You need to get in.
Like in terms of just an amount of capital?
Yeah, 5 is generally the transaction.
Yep.
Right. So 75 is going to be, you're going to be putting down X down payment. It's going to cover closing costs.
Correct.
Reserves, does that also include like how much reserves you're going to want to have?
Yeah. So that I would say, if the minimum being 75,000, if you're financing the property, that would encompass what you'd need to be able to close on that property, which of course would include reserves that you would need from the lending aspect, but also reserves in terms of expected maintenance and vacancy that we build into our pro formas.
Got it.
So reserves on both fronts there.
Yeah. And that's because right now properties are somewhere in like the 210 to 260, something like that.
Yeah.
Somewhere around there.
Yeah. I mean, inventory, I would say on the low end, right? I would go from 2 to 260 is going to be fair. The 200s, it's becoming more and more of a rarity. Yeah.
Interesting. Okay, cool. So that being said, the promise of the show, who is this not for? If you are somebody that really wants to be like very active, question every decision, make every decision yourself, probably not going to end up, making it through the first couple of calls with JWB. You're probably going to look for another option. If you're somebody that's looking to flip this thing, if you're somebody that's looking to like exit this in under 10 years, you're not thinking of this as like you're like buy and hold kind of part of it. You're probably going to want to look for another asset class and stuff like that. If you are not maximizing for long-term wealth creation to live off of the cash flow in your retirement later on and maximize as much of your net worth, probably going to end up going somewhere else. And then, if you're thinking about doing this in the next like 3 to 6 months, you're probably coming to the table with about like 75 grand that you either have in cash right now or you can pull from where you're invested in right now. But that being said, if you are convinced that rental properties is something that you're really, really invested, that you really want to be a part of, whether it is with these things or not, going to chat with JWB, like picking a time on your calendar that works out, hopping on this phone call is going to lead to some clarifying questions. It's going to lead to like, if it's not for you, it's going to be like, this isn't for you, but this over here is going to help you figure it out, or maybe you go this way.
Yeah. And I think it's also nice to give a little bit of clarity as to the second call, right?
Yeah. So please.
It's not just, I want to give some perspective too of what folks should expect in terms of, we've identified who it's not for, but if we identify, hey, we're checking the boxes here, let's move forward, then what that would look like is we want to take you kind of through this demo of how we track your returns, right? We have an ROI tool. So when I talk about holding ourselves accountable, you can literally log into a portal to see how your property is performing based off of how we told you it would. So we're going to show you what that looks like. We are going to take you through, again, kind of an overview of the market and the areas that we're in within Jacksonville. A lot of people come to us and they say, oh yeah, I love Florida. Orlando's great. Love to go to Disney World. Well, it's a very different market, Jacksonville is, than kind of a tourist destination. So we'll talk you through where those specific areas that we invest. And then beyond that, it goes even deeper into us as the operator and return expectations. So all of that kind of like more specific granular aspect comes farther down the line.
Got it. So chat with JWB.com. It's an exploratory call. You're going to get some advice. The next call, you get deeper. You start getting more specific. You start doing
from there. We build out an individualized plan for you. And then from there, it's property selection.
Oof, so that sounds exciting.
But I mean, how cool is that too? I get so fired up about this, that like property selection is the very last thing. We're not even talking about that until we're at least four phone calls in, because everything leading up to that is to make sure that on the same page.
In line with your behavior in everything that you do. You invest the time in the early part, make sure that everybody knows what they're getting into, make sure that interests are aligned, make sure that it's going to succeed later before you even give somebody the option to enroll, whether it's as an employee, whether it's as a service provider, whether it's as an investor, whether it's as a resident.
Yep. Right? I would say, for the folks that are, I guess one more little aspect to add into who this is not for. If you're calling the team and it's just send me inventory. I'm not ready. I don't want to talk to you. I don't want to go through this phone call. Just send me inventory. Not how we're gonna best serve you.
Yeah.
It's not a transactional. It should not feel like a transactional relationship. So
I like that.
You can go to jwbinventory.com.
Oh yeah, jwbinventory.com. You can see past shows and see what the inventory looks like. You can do all that. But you're not setting up here for a trend. This is not a checkout aisle.
Exactly.
Right? Like this is come sit at my table and let's move in together.
Yeah.
All right. We got a couple of questions here in the chat.
Sure.
Kate, we have Joyce Tessman is asking a really good question. She's asking, I'm expecting the housing market to fall and think I should wait to invest until that happens. Thoughts?
I would say we should give her the link to the Q4 Jacksonville market update.
I
love that, Pablo, where we are sharing what is going to happen, what we believe is going to happen as interest rates do start to drop, and what this market has proven to do over past recessions and market cycles.
Yeah.
And I think she might change her tune.
I think so too, Joyce. So I put the link in the chat to the Q4 market update that was done last week. Fresh data about everything that's going on. The TLDR on that, which is what the young kids are saying these days. You know what that means? Too long, did not read.
Oh, I
Didn't
would
raise.
not have guessed that.
Yeah. The TLDR on that report is that if you look at, so we looked at the macroeconomy, and right now what the macroeconomy, as we all know, real estate and economic cycles are just that, cycles.
Yes.
And we looked at the most recent cycle that looks like all the same ingredients as what's happening right now. And it wasn't 2008, it was 1980.
Yeah.
Right. It was the debt crisis of 1980. And what we saw was that there was a time as the Fed was raising interest rates where transactions of homes greatly reduced while pricing was still going up.
Right.
We've already passed that.
Yep.
Then there was a period where it kind of stabilized and pricing stabilized, right? That is what we believe is the period that we're in right now. And then what happened immediately thereafter is that interest rates were being raised because the Fed wanted to like start a recession to slow down the economy so there wasn't runaway inflation. The moment that happened, the Fed started dropping rates again and prices started going up,
right,
big time.
And the other aspect too is the inventory going into this, right? So the months of inventory, which I know was shared on that call as well, but when we're still 2.7, I believe, months of inventory. So when we're still that low, in addition to the fact that we are going to an environment where interest rates will drop, right? The supply aspect of that is already so low that prices are just going to continue to rise.
I was going to touch on that, but you did that very nicely.
Sorry,
right?
I was just so ready to.
No, I love it. Right. So like big picture macroeconomy, the trend is that the moment that interest rates actually start to drop, which the Fed will do as soon as the recession starts to happen, then at that point, like the home prices spike because there's all this pent up demand. And the idea is that you want to be in it before that happens so that you capture all that. And then when you look at it in the snapshot, what Kate is saying, right? There's months of inventory in Jacksonville. The average months of inventory to have average appreciation rates of 4.6% is somewhere around 7. Right now, we're like at 2 months of inventory, which means that we should have higher than normal home price appreciation in the short term. So this idea that people think that housing is going to drop is not supported by the supply-demand dynamics of the current market. And then when you start looking at what's coming down the pike, is that there is going to be this like near midterm future where the prices are going to go up. And then at that point, you will have you'll still get in and there'll still be upside, right? But you will have missed this like initial spike that's going to happen. So check out that market update. It's got tons of data. It's got tons of good stuff. The majority of that stuff that we're talking about is in the first 20, 30 minutes. So you don't have to watch the whole thing. Afterwards, it's stats on JWB and questions that we answer. But I think you're going to enjoy that. Check out that link in the chat. And if you're listening to this and you want to see that, just go to like our immediately past episode, either on the podcast or on the YouTube channel, which is where you'll find that. Now, there is another question. Oh, please remind me of which Jacksonville neighborhoods we are in. Cody
Mama Bear.
Mama Bear answered it. Arlington, North Side, West Side, South Side. They're all blue-collar home, workforce housing neighborhoods that have a certain dynamic of median price,
high rent
demand within a certain drive of like a certain amount of jobs.
Exactly.
And no violent crime.
That's right. And the same places that we've been in, right? Again, you're not going to be the spaghetti.
That's right.
We're not throwing you on the wall. We're not hoping that it sticks. These are the same neighborhoods that we have been investing, that our portfolio is in, because we know that it works. So we'll take you through that too.
Okay. That's it, Kate. Good job, buddy.
Thanks.
Kate's back, everybody. Speaking of Kate, this is kind of like a behind the scenes week here at the Not Your Average Investor Show. Because Kate was very instrumental in forming this community, forming this team. She was handling marketing for a very long time. Now she's sales Kate, as you can tell. She's running the sales side of things. But on Thursday, we're going to have Cody Adams, who we have referred to multiple times here today as the mama bear of the community, because really Cody is the master architect of like everything that we created here at the show. She came up with the name Not Your Average Investor. So we're going to tell that backstory. But more importantly, Cody in doing this stuff, right? Like Cody, I'm over here on the show side. All I do is talk to investors like myself and stuff like that. But JWB has like 3 like core cornerstones that build the foundation of what can create this thing, which are the team, the client, and the resident.
That's right.
And you got to be able to serve all three to make it happen. And Cody, because she is the mama bear of the marketing across all those things, she's had to learn that stuff in quick order and be able to communicate it really well. So we're going to talk to Cody about those three cornerstone things and how she's learned it, plus the backstory of the Not Your Average Investor Show, how we came up with the name, how we created this community. Because guess what? It wasn't the charrette. The charrette. That was my baby.
I know.
Yeah.
I know.
Because guess what? Cody's done this before. So she's got a bunch of experience in this. It's going to be an awesome show. Join us on Thursday, 12:30 again. You don't want to miss that. Real quick, BJ McKay. Greg stated this is more like the 78 to 82 market trend for previous caller question. Correct.
He's got it.
1980. I kind of truncated that, but thank you, BJ. I appreciate that. Hope you see us on Thursday. And from now until then, go to chatwithjwb.com, pick a time. But more importantly,
don't be average.
See you Thursday.